Welcome back. Markets this morning are slightly higher. Take a look. The Dow Industrial's up 2 points. The S&P up 13. But the Nasdaq is leading things with tech recovering once again. The Nasdaq right now up 178. That is 2/3%. This after stocks closed mixed yesterday. The Dow was down sharply after President Trump said the Iran ceasefire is over. The Dow was down 576. But the Nasdaq was up yesterday, up by about 52. Oil prices spiking yesterday on that the ceasefire is over. Crude finishing and is higher this morning at around $73.59 a barrel. Interest rates this morning look like this. Take a look at the yield on the 10-year right now, where we have been watching the yield spike. The Federal Reserve released its minutes from the June meeting, and we are talking about that this morning. Joining me right now, this is the first under new Chairman Kevin Warsh. Fed officials are split on the direction of rates as they left, obviously, rates unchanged in that first meeting. Warsh called the debate a family fight, the dot plot suggesting a rate hike this year, followed by cuts over the next 2 years. Joining me now is the Wall Street Journal's chief economics correspondent, Nick Timiraos. Nick, great to see you. Thank you so much for being here this morning. How do you view that first meeting, and give us your sense of where you believe rates are heading?
Well, Maria, thanks for having me. You know, I thought the most interesting line in the minutes yesterday, it was sort of nuanced, but only a few officials at that June meeting, the family fight that Kevin Warsh framed it as, thought that interest rates are at a restrictive setting, and only a slightly restrictive setting at that. That was maybe the most interesting line to me, because if policy is not holding the economy back, then that means nudging interest rates up isn't that big of a deal. You're just leaning against sticky inflation. So on the one hand, the minutes showed a lot of agreement. They said almost everybody thought that if inflation continued to run above their target, they might need to raise interest rates. On the other hand, almost everybody thought that if inflation came down soon, then they could stay where they are. But that question over, well, what is our policy actually doing to the economy here, could get more important as we see more of the inflation unclarity resolve itself.
Yeah, and I want to talk about that because your piece in the Journal, you write that the Fed officials are warning that the AI infrastructure build-out is a point of persistent inflationary pressure right now. Nick, what do you want to say about that in terms of this massive build-out for AI and hundreds of billions of dollars being spent? You write Fed officials flagged risks that would warrant higher rates. Tell us more.
Yeah, you know, AI is sort of the new entrant in the inflation story. So we've been talking about it for a year, but mostly in the context of something that's going to be disruptive to the labor market and bring down prices over time. A year ago at the Fed, the conversation on inflation was really around tariffs, and then over the last few months about energy. So the account of the June meeting is the clearest sign yet that officials now see the AI boom, the spending you mentioned on data centers, chips, the power grid, as a live source of demand that the U.S. economy is straining to supply. And if you have a third thing now driving up prices on top of tariffs, on top of energy, that's going to concern Fed officials when they've already been spending 5 years above their inflation target.
Yeah, that's really interesting because, you know, when you talk about this data center build out, we call it, you know, a new reindustrialization, and the idea that we're actually seeing massive productivity and that this is the best CapEx boom that we've ever seen. So from one standpoint, you look at that spend like a growth story, and yet you're saying and writing that the Fed officials are actually seeing this as a point of contention with regard to potential inflation.
You're in a race right now between demand and productivity. Right now, you're getting the demand, which could send prices up. Once you get the benefits of productivity from this new technology, that could bring prices down. But the question for the Fed is, again, after 5 years of above target inflation, how much longer are you willing to wait? And when you have a 2% target, you know, how long will that be credible if you continue to say, well, this is just a one-time thing, that's just a one-time thing, trust us, we'll get back down in a couple more years. And so I think that's really the issue here.
Well, I mean, we've got key inflation data out out next week. What are your expectations? We've got the June CPI out on Tuesday, the June Producer Price Index out on Wednesday, and last month consumer prices rose to the highest levels in 3 years, Nick. So what are you expecting, and what do you believe the Fed will be focused on? Is it a different set of data with Kevin Warsh at the helm versus Jay Powell that's most important?
Well, yeah, I think Chairman Warsh has made clear he has different views around inflation. He's been a little bit more dismissive of these sort of lagged, you're looking in the rearview mirror with this government data. But the other officials around the table, everybody has one vote, and I don't think their views are going to have changed all that much. The focus right now is going to be on core inflation, because energy prices did come down in June. We know we're going to get lower headline inflation in June, but core is really what the Fed is going to pay a lot of attention to. And again, I'd go back to the minutes. There was one thing in there where they said almost everybody agreed they could keep interest rates where they are or eventually lower them if inflation pressures dissipated soon. Highlight that word soon, because what I think is soon and what you think is soon and what somebody else says is soon, it could all be different. And so I think that's where the disagreement around whether you're going to raise interest rates, including at this July meeting, is going to come from. Because if you don't see progress soon, you're going to have people pushing to raise interest rates.
Yeah, it's interesting. We used to look at the wealth effect. Alan Greenspan, the late Alan Greenspan, used to look at the wealth effect. Any thoughts there, Nick, given the fact that these markets are up in the double digits since the end of March?
That's another big part of it, Maria, is that it's not just the spending on AI, it's the wealth effect. People feel richer. They are spending out of that perceived wealth. You're right that Greenspan talked about it a lot, and that could explain a lot of the progress we've had, the good news we've had on consumer spending. This resilient consumer is coming from, lofty asset markets.
Yeah, great point. Nick, good to see you, as always. Thank you, sir.
Thanks for having me.
Nick Timiraos joining us, Wall Street Journal, and we'll be right back.